Welcome to Java. Thank you kindly for joining me. It's October 21st, 2024. It is also Monday, so I hope you have a fresh cup of hot joe with me this morning. We've got a few things to cover prior to the market open. This is basically a rendition of the BRICS coming into the New World Order because we've got a few things to speak about that. But before that, let's speak about the markets. We've got our main risk indicators that I favor, the MMRI, because it conglomerates, particularly new here, the 10-year yield along with the relative strength of the dollar. Now it's sitting at 265.7. It is in high territory, but it hasn't really started spiking yet. It is rising. We've also got the fear greed meter in 75 area, which is extreme, but we can watch this increase. There's quite a few retailers in here. Now, I had a really good question about what we're looking for with that 10-year yield. Basically, we are looking for a spike in the yield on the 10-year Treasury note. If you understand why, or take a look at this chart right here, down here, this is the daily. It has risen in a significant amount since last Friday. Now, what's going on is this is basically the earmark for the debt and what's going on in the debt market. Now, treasuries are typically safe notes, and this indicates that there's large amounts of selling going on in here. So they have to raise the yield to get people to purchase more bonds. It was typically seen as a safety. Now, the larger picture, it's not this on its own, but what we're seeing is this is supposed to be safety, but so is gold and silver, as well as a couple of other things that we look for in the market. Now, this is moving opposite of these. So, with that, that is really what we're keeping an eye on. If we see a spike in this move up, it is moving up quite rapidly. That is a warning signal in the market. Now, to be fair, I don't think this is going to happen prior to the election. We'll keep an eye on it, though. It's being managed through several factors, plunge protection team, as well as the Federal Reserve purchasing it and suppressing those yield rates to make sure they don't raise too quickly. Now, this is the garbage story of the day. What the story is that the bond yields continue to move higher on signs of U.S. economic strength. Now, this could be anything, but the U.S. economy is not strong if you've been here for any period of time. And I'll speak about this a little bit more in a bit as well, because all of the evidence points to the opposite. So, what we're watching here is basically fear trades diverging, and this shows some troubles in the market. So, let's go through the elements a bit. First, we've got the 10-year yield, which we're watching separately. We also watch the relative strength of the dollar, or the Dixie, is also rising. Now, when these two rise together, they basically pressure the stock market. Okay. Now, at the moment, we've got green stock market. It's prior to open, but it's a little volatile. It is mixed, basically, if you will. So, what we look at, volatility index is beginning to rise again, and the futures look for a bit more weakness. Now, only slight at the moment, but they're showing weakness, more not a strong purchasing day. Now, we've got Bitcoin cryptocurrencies. They hit another all-time high, as well as gold and silver. Now, this is indicating substructure of the US dollar with some troubles, as well as the debt. Now, with this, cryptocurrencies right now are hitting basically resistance a bit, so they're pulling back slightly. Gold and silver as well. So we'll watch these throughout the day. With this, we've got Chinese stocks extending gains as the People's Bank of China are cutting their LPRs, is basically their loan rates for them, is basically cutting their rates. They're doing easing that will boost their stock market. And as it boosts their stock market, then money flows from the United States stock market to where they can make more gains. So again, that could pressure today's market. So we've got gold climbing to a record high again. They're saying this is the Middle East and United States election driving haven demand. Now, this is only partially true. There is also a large aspect of the rising of gold price and all real assets because of inflation. So this is not the total story, just like bond yields are not rising on economic strength. So you can't just look at the stories and look at the surface. We have to look at what is behind it. So with this, the sentiment right now is we've got big earnings, larger companies reporting this week. So markets on open are going to be hesitant. So little volatile. If you're not feeling good about the open, it could be a good day to basically sit on your hands. Gold and silver are up. They are sending a message about what's going on in the backdrop here. So I expect a bit of chop at the open or shortly after is what probabilities are showing. Again, this is not financial advice and it's not a certainty, just probability. So we'll keep our eye on the 10-year yield. It would be a great day for you to either sell data, the options market, or as I said, just sit back and watch for a bit. If you're a day trader and feeling bold, could be some good volatility. Okay, moving on to the real news. Prince Harry, Meghan Markle buying a home. I'm just kidding. I don't read this crap. It's a waste of time. Okay, so the real economy in the United States. Big Lots. Okay, now this is one of many. America's retailers, restaurants, all filing bankruptcies, closing. And what do they do with their employees? They fire them. They have to let them go. So we're watching increases and we're going to expect more. Unemployment, more failures, more Chapter 11 and different types of bankruptcies you're going to see from not only companies but also individuals. And this is not because we have a strong economy. So that just doesn't fit with anything if you look at the reality of it. Now, we do have one positive area here. There's a tentative deal announced to end the Boeing strikes. That's going to be positive for that stock. They are also reporting earnings, and not coincidentally, they are also going to unveil the details of this deal that they're bringing forward on the same day. So if you're looking for a trade, possible options triangle, play it as earnings, a lot of caution. Watch the IV on that one. But anyway, later on in the week. So with this, I would like to speak about a few other things in the larger scale. Governments are looking at taxing or banning Bitcoin in order to maintain their deficits. Now, this is coming straight from Minneapolis Fed. Basically, the Fed Reserve Bank of Minneapolis is saying that they need to suppress Bitcoin basically to ensure their ability to run permanent budget deficits by the government. So basically, what they're saying is Bitcoin is introducing what they're calling a balanced budget trap. So this would basically force the government to balance their budget and keep that forward. And this is written by the Fed themselves. Now, the researchers are saying that Bitcoin is an example of a fixed supply, private sector security without real resource claims. So they're saying basically that in order to fix this so that they can continue with their deficit spending, is that they need to basically get rid of this asset. So what does this tell you in the background? I'm buying more. Who's behind this? This basically is headed by Matthew Siegel. He is a digital asset researcher for Van Eck, one of the larger companies. Basically like BlackRock in these larger background, they're having the ETF, so they want it on the front side. They want to be able to manipulate it. So basically, what they're saying is that they want to add legal prohibition, extra taxes on Bitcoin to ensure the government debt remains the only quote unquote risk free security. They're talking about treasuries, the 10-year yield, the debt. So there should be an eye opener, very important. And it's getting kind of shoved to the background behind watching Meghan Markle buy her new place and wherever they want to go. So with this, on October 12th, we also had the ECB, the European Central Bank, releasing a paper claiming that older Bitcoin holders basically are profiting at the expense of newer holders, and they're trying to rile them up, saying that the asset should be regulated because this, quite frankly, isn't fair, because the people that sold and got out of it, those that are holding it, are getting larger gains. And they're saying this is exploitation, crying foul. However, these are the same people that are massively printing and devaluing everybody's savings globally. So they are basically engaged in legal theft through inflation and crying foul on Bitcoin. So they could do the same thing with basically gold and silver. It's just that they know they have to hold their attacks. So their other argument is that Bitcoin is rarely used as a payment method, and basically that they are the preferred method of transaction for criminals. So that contradicts itself. And meanwhile, according to a May 2024 report from the US Treasury Department directly, fiat cash remains the undisputed king for illicit transactions. So basically, they're trying to get here and play this. So that's really one of the major stories for today. We've also got Stripe. TechCrunch founder for Stripe is purchasing Bridge for 1.1 billion. Now, the deal is basically it's a stable coin-based payments network. It was formed by two Coinbase executives, and this payment network is for cryptocurrencies. It is built as a competition for the Swift payment network and against credit cards. So it's something to watch. With Stripe, this is going to be, I suspect, a mover on the day. So we've got another, basically, this kind of confirms everything. The authorities are saying that there will be another redesign of United States dollars, this the physical cash that circulates. We've got the US $5 bill being released between 2032 and 2035. The 20, they're looking at 2030 as a release date, and the rest between 2034 and 2038. They're talking about the timelines, reflecting meticulous planning and effort required to implement a comprehensive overhaul of the nation's currency system. Now, this isn't the currency system, it's just the printed fiat, is what they're talking about. So they're not quite honest about this coming out. Now, this is the kicker. They're saying the redesign of the dollars is a testament to the government's commitment to preserving the currency's integrity and relevance by trying to stay ahead of counterfeiters. Now, they're the largest counterfeiters of all by printing massive amounts of it. And if you don't know how this works, please just stay with us. We'll explain all of this as we go on. Now, they're saying this is going to serve as a reminder of the ongoing efforts to protect the nation's financial system. So, more printing, more dollars. We've got Warren Buffett selling Bank of America shares. Basically, a lot of troubles with the banks. I had a video yesterday. If you want to see that, we'll give a little more explanation of that. We've also got JP Morgan basically showing surging dollar demand as United States election nears. Now, this is kind of the narrative about selling the treasuries. When you sell the treasuries, you're taking dollars in return. So this is the flip side of it, but it's basically because people are dumping US debt. A little bit more on the war. Just the latest update, because we did have more attacks from Israel in Beirut, southern Lebanon overnight. They basically were saying that they were attacking financial institutions that are supporting Hezbollah. So that bombing's still going on. We've got South Korea calling for immediate withdrawal of North Korean troops allegedly in Russia, fighting for Russia. Well, it's not really, you can't really in war start dictating who's got the alliances, but this is what's going on there. It's large controversy. So with this, we've got United States troops going over into Ukraine as well as other Western world. And we've even got casualties, but you don't hear about that. So the final thing I would like to speak about is the BRICS summit in Kazan. They're talking about the new world order in the making. Now, all central banks heading towards this. We've been speaking about this going to the basically CBDCs and tokenizing everything. Now, what they're talking about is the presence of the UN Secretary General in Kazan, basically sending a strong signal that the world is moving towards this new architecture and ready to basically turn from the Western world of the dollar. So, with this, I wish you all a great trading day, wonderful day in general. Thank you for staying with me, and until I see you again, stay free.